Pablo, good to see you. How you doing? How you been? Joe, evening, and CMF. How did your day go today? It was a busy day, Joe. Good to see you as well. How you doing? How's your day been? How's things with you, Joe and Pablo? Mike, good day, brother. Good to see you as well. How you doing? Hey, brother, Comatose, good to see you as well. How you doing? Good evening, Miles and family. Ian, good to see you as well, brother. How you doing? I'm just trying to pin the live, pin to profile, pin. There we go. Okay. Let's get back to this. Good evening, brother Miles. Funky brother, good to see you as well. How you doing? Evening, Miles. How's things? Artistic, things are good. How's things with you? Good evening, CMF. Funky brother. Skull, hope you are having a great day. Let's go, Mike. I am. It was a very busy day, fairly honest. Good evening, Miles, and all CMF. Good to see you all. JP, how you doing, brother? It's been okay, thank you. Let's go, Joe. Good evening, Miles and CMF. Manny, good to see you as well. How you doing, brother? How you been? T, good to see you as well. How you doing? How you been? Okay, let's do intro, disclaimer, and what we're going to go through on tonight's live. About that time, everyone should be tuned in for the first part of live. The market is starting to, essentially rebound from the downtrend we were having. So, welcome to the CMF Live. If you're watching this for the first time, remember the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live has always been not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do Q&As on this live as well, which means if you do have any questions, any part of the live, put it down in the comment section. More than happy to help you out. I'll always read out every single comment and give a reply on the live. Now, before we do go from essentially through the first news on tonight's live, just want to take one quick second just to say thank you so much to everybody from the CMF who has already liked and retweeted this live if you're watching this on X. CMF members, if you watch this on X and you haven't liked or retweeted this live, please like and please retweet this live. If you're watching this on YouTube and you've liked the live, thank you so much. If you haven't, please like the live also on YouTube as well. And leave a comment on both sides, on X, put a few hashtags, even on essentially YouTube side as well. Now, on tonight's live, we have a mixture of news to go for, as we always do. We have news regarding the Fed. We have news regarding prospective news of are we going to get rate cuts from very high-profile seats. We have news regarding regulations, essentially regarding the crypto space. We have some interesting news to go through and also some Ripple news to go through towards the end of the live. So, as always, a mixture of news to go through and some international news to go through as well, which is all related to crypto, and some AI news to go through as well. Now, before we go through the first news, which is related to the Fed talks, we're going to go through the bullet points of essentially what was discussed previously and what's going to be discussed essentially following through. Before we go through that, let's go to the comment section first. Let's see where we were at. Let's see. We were at here. Good evening, Miles and CMF, Bull XRP. Good to see you. How you doing? And thank you for the retweet. I just got a notification. Good evening, Miles and CMF. Free and Feather, good to see you. How you doing? Good evening, Miles and all CMF. Addy, good to see you. How you doing? I'm first again. Long. Let's go, Mike. Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing, Shelly? How you been? Don't forget to like the live and retweet facts. Let's go, funky brother. Evening, mate. Pure, good to see you as well. How you doing, Pure? Good evening, Miles and family. Orphan, good to see you. How you doing? How you been? That's the least we can do for Miles for his free time he dedicates for us. Let's go, funky brother. Likes and retweets, facts. I appreciate every single one of you who always likes and retweets these lives, honestly. We're not far off seeing them green candles next month by the looks of it. Yes, facts, JP. Come on, everybody. Let's go, funky brother. Like and retweet everyone if you haven't already. Now, the highly anticipated Fed minutes is now released. So what the Fed previously discussed has been released now in bullet points, which we're going to go through on tonight's live. And then straight away, we're going to go through essentially what could be discussed on the upcoming Fed essentially meeting in Jackson Hole. Now, the highly anticipated Fed minutes released. Here are the details, essentially, and Bitcoin's essentially Bitcoin and cryptocurrency, you could pretty much say, were indirectly mentioned. So the FOMC minutes, which contains the details of the Fed's essentially last interest rate meeting, have finally been published today. So here it is. Here are the highlights from the meeting on the minutes. Many officials said it could take time for full impact of the tariffs to be seen. Some members are concerned about essentially high asset values. The majority believe that the risk of inflation outweighs the risk of employment. Several participants noted that the current essentially target range for the federal funds rate may not be essentially too far from essentially neutral. The authority's real GDP forecast for 2025 to 2027 were essentially similar to those prepared for the June meeting. Almost all attendees at the Fed's July meeting agreed that keeping the benchmark interest rates between 4.25% and 4.50% would be appropriate. Participants essentially assessed that the impact of customs and duties on commodity prices has become essentially more pronounced, but their overall impact on the economy and inflation is not yet clear. Some participants essentially stated that it would be more appropriate and possible to adjust monetary policies further, or rather than waiting for essentially full impact of tariffs on inflation to become clearer. So it's not just essentially that, Jerome Powell does have the loudest voice in the Fed. There are members inside the Fed that are still weighing in and saying, Jerome Powell is not thinking correctly and rate cuts is the solution. Most officials believe that the Fed policy is essentially an appropriate position right now. Participants also noted that it will take time to more clearly understand the magnitude and essentially persistence of this impact of higher tariffs and inflation. Participants who opposed leaving interest rates unchanged thought that inflation was unlikely to be sustainable and expressed concerns about employment risk. Some participants also said that if we leave aside tariff factors, inflation levels would be close to target. Authorities are essentially closely monitoring the growth of stablecoins and the risk associated with them after the passage of the Genius Act. Many officials predict that the economic growth will slow in the second half of the year. At the Fed's Open essentially Market Committee FOMC meeting held essentially in July 29th to the 30th, a decision was made to keep interest rates consistent, but two senior officials opposed this decision and requested a rate cut from the Fed. Less than essentially 48 hours after the Fed employment data released confirmed Bowman and Wallace concern. Labor essentially department data showed that job creations in July was essentially below expectations, and the unemployment rate rose, and labor force participation fell to its lowest level since essentially late 2022. Even more striking was the downward revision of data for May and June, wiping out more than 250,000 jobs. This development severely damaged the narrative of a strong labor market. President Donald Trump argued that he was angered by the data and fired the head of the Bureau of Labor Statistics, as I previously said as well. Following the minutes, all eyes turned to the Fed's Jerome Powell speech at the Jackson Hole Economic Center on Friday. This Friday, Jerome Powell is going to be doing a speech that could potentially boost the market space or have a negative impact on the market space. But yet again, just remember one thing: every time Jerome Powell speaks, if there is negative effects from his speech on the market space, it don't last more than 48 hours until the essentially market space moves on to a different type of news, or it's just on pure manipulation and the market essentially still continues to get essentially on a downward trend. Those who advocate for interest rate cuts to protect the weakening labor market or align with the members' concern about inflation. This will essentially be Jerome Powell's final Jackson Hole speech as his term expires in May next year. So this is the final time, the last time Jerome Powell is going to be doing a speech, because his term is coming to an end in May next year. So even though essentially Donald Trump hasn't been able to move him from his seat yet, but his last speech is coming up in Jackson Hole. So the question will remain, are we going to get rate cuts? Is Jerome Powell going to give a positive speech towards the market space? Or is he going to be coming out as usual, blaming tariffs for everything, and again, not doing his job? I mean, he is the only person, to be fairly honest. There's about two more people as well. It's basically Jerome Powell, Maxine Waters, and Senator Elizabeth Warren. These are the only three morons or the three stooges left from Joe Biden's, gang of administration circus freaks. Let's just be honest with ourselves. The only three people left from the previous administration that are still manipulating the market space is one, Jerome Powell, two, Senator Elizabeth Warren, and three, Maxine Waters. These three people are collectively ruining the American market space. because the only target they have is they hate Trump, which means Jerome Powell will refuse to do rate cuts because he hates Trump, and he's willing to crash the entire market space just because he hates Trump. Senator Elizabeth Warren hates the idea of Trump making money and cleaning America up, and so does Maxine Waters. These three collectively have essentially come together to ruin American lives on purpose, just because they hate Donald Trump. And they even brainwashed their followings to think it's a great idea to ruin the American economy. So here is also a little bit on that. Donald Trump may have not been able to remove Jerome Powell, but one by one, he's trying to replace the Fed around him, which is smart. So Donald Trump may have essentially cornered the Fed chairman, Jerome Powell. He appears to be forcing another member to resign and push for interest rate cuts. So even though essentially we are coming to his last term, and he's essentially for Jerome Powell, his last term, his last speech at the Jackson Hole and so on, one by one, Donald Trump is trying to remove and replace members of the Fed around Jerome Powell to get what he wants. US President Donald Trump housing essentially regulator bill has raised allegations of mortgage fraud against Fed member Lisa Cook, saying essentially she should resign or be fired. The Federal Reserve Housing essentially Finance Agency director essentially Bill said on CNBC, "Money movers, frankly, I think he should resign quickly. He'll essentially either resign or be fired." Jim's statements came after she sent a letter to the Department of Justice DOJ requesting a criminal investigation into Cook. Trump, essentially following the letter, supported essentially Bill called on social media, tweeting he must resign now. If Cook leaves office, Trump could potentially secure a majority among the Fed members who support interest rate cuts. It would also be essentially clear the way for Trump-affiliated candidates to fill the 12 regional Fed chair positions that are due for renewal in February. Not only does essentially the Republicans pretty much control every aspect of the United States right now, and just, on a side note, let's just say the Gavin Newsom situation where he's coming out of nowhere, because he did such a great job in controlling California with its high crime rate and everything else high through the ceilings. Gavin Newsom has essentially out of nowhere decided to run for presidency against Donald Trump and is telling everybody that everybody should vote for him. Honestly, he did the worst job as anyone could have possibly done controlling an entire state. He ruined California into the ground, but somehow he thinks he deserved the presidency seat. And there are people supporting him because people don't like the idea that Trump is cleaning up America. He's stopping immigration. He's creating more jobs. He's reducing crime. People are saying there's no crime in Washington, D.C., that crime has been lowered essentially, 30%. Moving forward, crime has been lowered 30%. It doesn't need help. Yes, it does. Just because crime has been lowered from here to about 30%, there's still so much more to go in terms of crime to get completely rid of it. But anyways, if Cook essentially, honestly, is beautiful. The way Trump has just came in and took control of everything, and that Republicans have taken control of everything is incredible. Letter to the Department of Justice, DOJ, requesting a criminal investigation into Cook. Trump following that letter. If Cook leaves office, Trump could potentially secure a majority among Fed members who support interest rate cuts. It would also make a clear way for Trump-affiliated candidates to fill the essentially 12 regional Fed chair positions that are due for renewal in February. Alleged essentially that Cook's simultaneously listing of 2 properties on his primary residency was clear mortgage fraud. You can't do that in America, he said. If you are committed fraud, it will be clearly exposed and you will be prosecuted. So a member of the Fed is committing fraud, mortgage fraud. Ironically, he's the person in charge of some sort of mortgage departments in the US government. Cook was essentially appointed to Fed in 2022 by the former president, Joe Biden, and voted to keep interest rates steady, at least essentially in the last meeting. The Fed and the Justice Department declined to comment on essentially his allegations and Trump's responses. The Trump administration has previously filed similar mortgage-related charges against Democratic Senator essentially Adam and New York Attorney General Letitia James. This is being seen as a new dimension to Trump's pressure campaign on the Fed to lower interest rates. I'm loving this. Honestly, the idea that Democrats right now, politicians, are being pressured is just beautiful to watch. Also, Bitcoin and altcoins essentially and the stock market will react closely to essentially watch Jerome Powell's speech at the Jackson Hole. This is an annual event that brings together economists, central bankers, and other policymakers to deliberate the global economy. The Fed's chair statement is the main event and that most investors and traders will watch. Historically, the Fed chair uses the event to provide guidance on the last 3 central bank meetings of the year. This week's speech will be watched closely because there are signs that the US is moving towards stagflation due to Donald Trump's tariffs. The Bureau of Labor Statistics data released this month showed that the labor market has deteriorated recently. The unemployment rate rose to 4.2%, while the economy created just 73,000 jobs in July, which that number has been edited now. Also, the market participants believe that the Fed will cut the interest rates in this meeting. Polymarket odds are essentially right now sitting at 70%, while the CME Fed Watch tool is sitting at 85%. So high percentage ratio, you can pretty much say, of people expecting some sort of rate cut announcements to be coming out of the Jackson Hole, which is the last time Jerome Powell is going to be doing a speech at the Jackson Hole because his term's about to end. So is Jerome Powell going to be ending his term on a good note, or is he just going to be like a stubborn child as he always is? Jerome Powell will likely change his tune and pivot towards a cut in September is what they're essentially saying, pointing to the softening of the labor markets. He will also emphasize that monetary policies will remain restrictive even after a 25 basis point essentially point cut. While the Fed's chief statement will be important, the main market moving essentially event will be on September 5th when the US publishes the non-farm payrolls, and essentially on September 11th when the BLS publishes the CPI data. Like other assets, the crypto market is sensitive to essentially Jerome Powell's statements. In theory, a sign that he is leaning towards a cut in September meeting will be bullish for the entire industry. It will also be bullish extremely for the crypto markets. Low interest rates boost the stocks and crypto markets by triggering a rotation from the bond markets to a riskier ones. A good example of this is essentially what happened during the pandemic when the Fed brought rates to zero and launched quantitative easing. The two markets may also rebound even after a hawkish statement by Jerome Powell. Since they have dropped before the speech, it is likely that they will bounce back when the speech ends and investors buy the dip. So, Jerome Powell's term is coming to an end. Also, Trump is right now removing everybody around Jerome Powell and putting in his own people. So honestly, the departments right now that Trump controls is just amazing to watch. He's doing an excellent job, in my opinion, on being able to control every aspect of the US government, including the Fed by the looks of it. Because even though his term is coming to an end, still replacing people inside the Fed that are oriented with essentially a crypto mindset or positive on Trump administration is brilliant to watch. And the big question is he going to do rate cuts? Is he going to mention rate cuts for one last time at a Jackson Hole event? Let's see. But that is why the market right now is slightly also bullish, that because Friday is coming up and we possibly could get an announcement of rate cuts is what's on the agenda. Now, the Senate is pushing essentially for baptism crypto legislations, promising clarity. Before we go through that, let's go start the comment section first. As I said previously, this is live, which means if you do have any questions or statements, put it down inside the comment section. More than happy to help you out. So let's see where we're at. Let's see, we were at here, I think. Come on, everybody, let's go funky well. Good evening, Miles and CMF. Hope everyone is well. SP, good to see you. How you doing? Good afternoon, Miles and CMF family. Let's go, Carlos. How you doing? Hi, Miles and family. Alex, good to see you. How you doing? I just blocked this guy as he was fed up. Thank you so much, Frank Butter, for that. Hi, Miles and CMF. Stormy, good to see you. How you doing? Greetings, Miles and CMF. Lena, good to see you. How you doing? Ryan, are you Muslim? Are you Muslim? I'm not Muslim, no. Even in Miles and family. Susie, good to see you. How you doing? Lena, good to see you. How you doing? Hi, Miles. Hi, Miles and CMF. Let's go for Facts News. Good to see you guys. Carl, let's go. Good to see you as well. Good night, Mouse. How you doing, D? Good to see you as well. Now, the Senate. The Senate pushes for baptism crypto legislation, promising essentially clarity. The Senate banking chair Tim Scott predicts up to 18 Senate Democrats will support the Responsible Financial Innovation Act of 2025. So on yesterday's live, essentially, we talked about how there's a certain push happening for Democrats to become pro-cryptocurrencies. And today, there's been an update on that matter. Apparently, 18 Democrats might be joining the Republicans on voting in favor of the Clarity Act, which is coming up on the 30th of essentially September. Also in September, if we get rate cuts, cherry on top. This baptism push signifies potential consensus in crypto legislations, potentially influencing market structures and regulatory approaches in digital asset sectors. The Responsible Financial Innovation Act of 2025 aims to provide regulatory clarity in digital asset space. Senator Tim Scott, along with prominent Senator members, is spearheading this initiative right now. Key support is anticipated from both Republicans and Democratic parties. The bill involves Senator Cynthia Luminous's bill, essentially Senator Cynthia Luminous, Bill Hagerty, Bernie Monero, promising a baptism commitment. It seeks to distinguish between digital assets, essentially securities, and commodities, affecting essentially regulatory frameworks. Significant Democrat backing is expected in upcoming Senate discussions. The legislation, if passed, will directly affect Ethereum, Bitcoin, stablecoins, XRP, and other major altcoins as well. Impact on major clarity could simulate essentially institutional engagements and influence capital inflows even further inside the crypto market space. Platforms will need to comply with these new standards also. The integration of the SEC and CFTC rules could essentially lead to more consistent oversight across US markets. The legislation extends to custodians of digital assets, potentially impacting essentially financial sectors and trading platforms. Market liquidity may also essentially experience a shift. Proposed laws will require platforms to adjust their compliance regarding regulatory classifications. Analysts also essentially predict transformations in decentralized finance and in the space. The baptism support reflects shifting perspectives on digital assets and oversights inside the United States, and it seeks leadership. Historical data like the Genius Act and the Clarity Acts demonstrate the success of this corporation. Yesterday, building on the success of the Genius Act as well as the Clarity Act that passed the House of Representatives, Chairman Scott and his colleagues introduced initial discussion draft of the digital asset market structure legislation, covering essentially issues under the Banking Committee's jurisdiction. Tim Scott, chairman of the Senate Banking Committee, shared. Analysts foresee impacts comparable to previous financial regulation reforms. Looking ahead, Clarity aims to balance innovation without stifling industry growth. So far it seems like we got 18 Democrats in favor of cryptocurrencies, in favor of essentially the Clarity Act, which means 30th of September comes around, Clarity Act passes through. It brings the clarity we need inside the market space for more institutions to get involved inside the crypto space, because the gray areas will close up one by one, and it's just, one massive legal play. Everybody gets to do what they want inside the crypto space then. The SEC knows what they're doing, the CFTC knows what they're doing, and this could also be the reason why the SEC is holding off on essentially approving any essentially ETFs for XRP, for essentially XLM, for HBAR, for AVAX, for Solana, for Cardano. This could be another reason why the SEC might be slightly pulling off and waiting for the Clarity Act to pass, so that the roles can be essentially, the CFTC knows what they're doing and the SEC knows what they're doing because of the Clarity Act then. Now, which we're not that far off, 30 September. Which is also a rate cut month, if we get the rate cut as well, which is, honestly, cherry on top. Now, also, if we get those ETFs in September, even better, honestly. The amount of institutional inflow that will be happening will be ridiculously through the roof. Let's just say XRP is going to give Ethereum a run for their money. Crypto advocacy groups double down on Quanta's confirmation at the CFTC aimed pushback. So, one person that essentially is highly praised by the essentially crypto space was chosen to be a part of the CFTC and to become a chair of the CFTC. Some people said he's not a good fit for this position, but the crypto space said otherwise, and they stood behind him. So here it is. Several cryptocurrency and blockchain essential associations advocating for the industry are pushing for a prominent confirmation of Brian Quantz as the chair of the US CFTC. Today, a letter to the US President Donald Trump, representatives from several crypto organizations retweeted their support for Qantas' confirmation in the Senate following President's nomination. Strategies included essentially Crypto Council for Innovation, Blockchain Association, Decentralization Research Center, DeFi Education Fund, the Digital Chamber, the Satoshi Action Fund, and Solano, essentially Policy Institute. The advocacy organizations argued that Qantas was the well-suited person to head the CFTC, in part due to his experience with the understanding of digital assets. If we get somebody in charge of the essentially CFTC who is pro-crypto in general and pro-Trump in general, honestly, things are just falling into place. The Republicans controlling everything and pro-crypto controlling everything, pro-essentially Trump administration controlling every aspect of the US government, even better. After being nominated to the chair of the agency in February, he was referred to the Senate Agriculture Committee, which delayed the vote days before the chamber was scheduled to break for August, essentially in terms of recess. The committee said that the delay came following a request from the White House. An August report also suggested that Gemini's co-founders Cameron and Tyler pressed Trump to reconsider Qantas' nomination, claiming that he would essentially not fully intact the president's crypto agenda as CFTC chair. As essentially the Presidential Working Group on Digital Assets and Markets report clearly articulated, the CFTC has many critical and complex and nuanced goals ahead of it, including essentially working with Congress to establish a comprehensive federal market structure framework with appropriate oversight of digital assets and commodities in order to essentially advance your administration agenda, said the letter, adding that installing a permanent chairman to the CFTC is absolutely critical to realizing these goals. Qantas has previously served as a CFTC commissioner under Trump from 2017 to 2021, having essentially been nominated by former US President Barack Obama even in 2016. Even if Qantas's confirmation were to move quickly through the Senate, once the chamber returns from recess on September 3rd, the regulator still essentially has vacancies that could slow its work related to crypto and otherwise. Currently, the 5-member panel of the commissioners essentially is staffed by only acting CFTC chairman Caroline Pan, who is extremely pro-crypto, to be fairly honest, and Commissioner Kristen Johnson, which is okay. Commissioners Summer essentially and Christie essentially Goldsmith, as well as former chairman Rostam Benham, departed the CFTC earlier this year. Johnson said this would leave before 2026, and Pam, she said, essentially planned to move to the private sector if Qantas were nominated, suggesting that the prospective chair could be the sole voice until Trump picked other candidates to staff the agency. In a statement to Cointelegraph, representatives for the Crypto Council for Innovation highlighted the need to confirm CFTC leadership, aim the 2 commissioners panel, no permanent chair, and pending legislations for crypto market structures. Senator Cynthia Luminous, one of the essentially lead voices pushing for the chamber to pass the market structure bill, said the bill, which could clarify the roles the CFTC and the Securities Exchange Commission (SEC) will have over the crypto space, should be signed and will be into law by 2026. So, one person that is apparently the perfect fit, according to the crypto organization associations out there, is Qantas. He should be the man leading the CFTC. If he is the man chosen to lead the CFTC, apparently a few members of the CFTC said they'll leave if he is chosen as the chair. Good, because the man that's going to be chosen as the chair, by the looks of it, is pro-crypto. He has a background essentially in cryptocurrency, a background in the CFTC, which seems like could be the most perfect obvious choice. But the Democrats are essentially not doing their best to get him in. Also, apparently the Trump administration is having second thoughts, or they're thinking about, is he the right choice? Either way, the crypto associations are behind him right now. Now, the Federal Reserve. There's so much Federal Reserve news going on right now that's impacting the crypto market space. And it's, one of the main reasons, as I said, why the crypto market space is up right now is because of the speculation, once again, of rate cuts happening in September. Also, September essentially being the month that we, could possibly be seeing the Clarity Act fully passed. Now, the Federal Reserve expected to hold interest rates until 2026. This is a new perspective coming out from Morgan Stanley. So, in a significant essential revision of earlier predictions, Morgan Stanley and Bank of America will essentially have forecasted that the Federal Reserve will maintain its interest rates at the current levels throughout 2025. The next potential rate cut is anticipated in 2026, according to Morgan Stanley and Bank of America, assuming no major economic upheavals. Now, this comes essentially as a departure from prior market expectations, where analysts projected multiple cuts before the year's end. Leading the outlook, essentially at Morgan Stanley, are Matt and Michael, both central figures essentially staggerizing the macroeconomic cycles and Federal Reserve policies. Recently, essentially, the company has explicitly stated that in its research podcast, the Federal Reserve will likely hold off on rate cuts until 2026. This stance was expressed by Michael, who commented, "You, on the other hand, continue to think the Fed will stay on hold for the rest of this year, with a lot of cuts to follow in 2026. The recent reports from Morgan Stanley underscores the internal projections and communicated to clients, citing strategies of Bank of America and Morgan Stanley told clients that they do not expect a single rate cut until at least 2026. Now, why is Bank of America and Morgan Stanley, changing their opinion once again? Because they've changed their opinion throughout this entire year. They expected 3 rate cuts this year, and then they changed their opinions again and expected 2 rate cuts. They changed their opinions and said we're expecting 1 rate cut, and they changed essentially their opinions now and now saying when we go into 2026 is when we're going to be seeing that rate cuts. Also, they said we're going to be seeing multiple rate cuts in 2026. Yes, the only reason we'll be seeing multiple rate cuts in 2026 is because Jerome Powell is going to be losing his chair. So obviously the person that's going to be chosen after him is going to be the one that's doing multiple rate cuts, and is obviously going to be a Trump-appointed person. Now, putting all that to one side, officials' report from Morgan Stanley reinforces their forecast that the Federal Reserve will maintain steady interest rates in the immediate future. No immediate essentially impact on major funding flows or institutional allocations is expected. However, institutional essentially investors may maintain a cautious risk posture with interest rates remaining high. Assets affected by these projections include essentially Bitcoin, Ethereum, and other interest high sensitive tokens, such as DeFi governance, Layer 1, Layer 2 assets. Likely BTC and Ethereum and related altcoins may see reduced flows from institutional allocators who prioritize yield in fiat instruments, which is somewhat incorrect. The idea that institutions won't jump into the crypto space because there's no rate cuts this year is stupid and moronic, and it's just, in my opinion, Morgan Stanley and essentially the Bank of America mentioning this is manipulation, because day by day we're seeing more institutions entering the crypto sector. So it's a stupid, essentially, opinion to be giving up. And in my opinion, honestly, it sounds like a very manipulated opinion to be telling the essentially retail section that, yeah, the institutions won't enter the market space this year at all because there's no rate cuts whatsoever. But day by day, we're seeing more companies creating some sort of a crypto treasury. We're seeing more countries discussing the idea of having crypto treasuries. And we've had announcements of companies buying into crypto. I mean, just yesterday, we talked about essentially Gemini Exchange having that partnership with Ripple on essentially funding them, lending them through RLUSD. Just yesterday, we talked about Bullish going IPO and using RLUSD. So the idea that, essentially this moronic opinion, manipulated opinion that essentially they're giving out in their reports that, oh yeah, we won't have interest rate cuts, that means no institutions this year, is just stupid. They're trying to manipulate the market space by their reports. Historical data indicates that Fed rate pause environments generally align with a flat or declining total value locked TVL in DeFi. Reallocation to stablecoins or yield platforms. No significant TVL surges anticipated before rate changes. Past periods where the Feds essentially held rates such as essentially 2023 to 2024 saw sideways or slightly bearish crypto price actions. In governance tokens, stablecoin providers, Layer 1, example Solana, ADA, and so on, and Layer 2 projects, ARB, OP, and so on, often underperformed compared to more bullish market periods when rate cuts were expected. These trends may also essentially offer insights into future market reactions under the current projections. Notably, no direct commentary from the prominent key opinion leaders such as Arthur Hayes, CZ, Vitalik, or Raoul Pal has essentially emerged in the current week regarding Morgan Stanley's new forecast or the Federal Reserve's rate hold book on that sense. The recent sentiment among crypto Twitter essentially and developer forums generally reflects disappointment on that matter, evidenced by fewer bullish calls for major DeFi and altcoin rallies. As the Federal Reserve's forecasted rate path remains unchanged, with no new statements from the CFTC, SEC, or other essentially financial regulators, which again is one massive lie. Just essentially, what, 2 weeks ago, we had the CFTC, or a week ago, we had the CFTC come out and say they've created something called Project Crypto to bring innovation inside the United States. So you can clearly see that the Morgan Stanley and Bank of America's analysts are definitely manipulating their, what they're saying. Essentially, they're twisting their words. One saying institutions aren't entering the crypto space because there's no rate cuts this year whatsoever, which is absolutely stupid to say, because institutions have been entering the market space. Just yesterday, we talked about institutions entering the market space in terms of bullish Aura USD or Gemini, essentially Aura USD. And then essentially, saying that the CFTC and SEC, having came out with any sort of bullish statements for the crypto space because we don't have rate cuts. Again, it's stupid to say, because the CFTC just a week ago came out and said we've created Project Crypto to bring innovation back to the US. 2 weeks ago, we talked about the SEC creating their own version of Project Crypto to bring innovation towards the crypto space. We had the SEC close the Ripple case, back-to-back essentially closing cases this year. So this, honestly, this is how they manipulate essentially investors' mindsights, retail investor mindsights, because some people will read this report and go, yep, Morgan Stanley, Bank of America is saying, not a single institution is going to be coming out and investing into the crypto space this year, and we're going to be having no essentially positive comments from the SEC or CFTC at all this year because Morgan Stanley said so. It's absolutely ludicrous, because they're absolutely spewing lies right now. Affected tokens primarily include Bitcoin and Ethereum and governance essential assets. In the backdrop of these developments, the insights shared by credible financial analysts and strategists offer vital guidance for investors navigating these uncertain economic terrains. Just want to mention one thing on them mentioning. So they said on their own essentially perspectives, in the backdrop of these developments, the insights shared by credible financial analysts and strategists offer vital guidance for investors navigating these uncertain economic terrains. I'm sorry, Moody's, everybody forgot about that, 2008? The entire Wall Street respected Moody's essentially opinion on the market space. They came out and said the market's doing what? Great. About 48 hours later, the US had the biggest crash in history in terms of the market space. So just because an opinion is coming from Morgan Stanley or essentially Bank of America, it doesn't make it gospel in a sense that, yes, this is, because they're saying this, it's 100% true. No, it isn't. Because even people like them manipulate and twist their words to essentially corrupt the mindsights of the retail section to make them think, yeah, sure, just because there's no rate cuts this year, that means no institutions will enter the crypto space, no more partnerships, no more positive news from the CFTC or SEC at all. But this year we've had the SEC drop cases one by one, and in fact dropping the Ripple case, which is the biggest case there is with the SEC. Then the SEC creating a crypto project to bring innovation. The CFTC dismantling essentially their department that goes after crypto companies and creating a Project Crypto innovation project to bring back crypto space. The White House doing back-to-back cryptos. The OCC turning essentially Ripple applying for a banking license, a Fed master account. Just yesterday, Gemini. There's so much that's happened this year. But according to the Bank of America and Morgan Stanley analyst perspectives, nothing's happened so far. This is why I say question everything. When that report came out from the labor statistics and Trump said, no, I don't believe it. This is complete BS. And he ended up firing the person that came out with the labor statistics report. Turns out he was right for firing her. One, because she was from the Biden administration, which means she was chosen not because of her merit. Let's just be honest with ourselves. Nobody's chosen because of the merit, again, essentially around Biden's administration, to be fairly honest. But because Trump was right, you should always question everything. It doesn't matter if the report comes out from Morgan Stanley, if it comes out from Bank of America, if it comes out from JP Morgan, if the report comes out from BlackRock, if the report comes out from Moody's, whoever the report comes out, question everything. Because they honestly manipulate the hell out of everything. And the biggest one, as I said, Moody's, 2008. They told everyone the market's doing great. 48 hours later, hundreds of thousands of people lost their homes, lost their jobs. Companies went bankrupt. About 48 hours later of them saying, the market's doing great. The world pretty much went into a collapse mode. This is why I say, honestly, question every report. Doesn't matter who it comes from, question it. Now, SEC is about to be hosting, as we've talked about in the past. And again, another positive thing. Remember, just now I was telling you about how Morgan Stanley and Bank of America are saying, nothing's happened so far. And the SEC has done nothing for the crypto space so far because of no rate cuts. Now the SEC, as we talked about previously before as well, is doing crypto roundtables. But according to Morgan Stanley and Bank of America, the SEC came out with nothing so far for the crypto space. But they're actually doing crypto roundtables in many American states. And the first one is going to be in Chicago. They're actually now reaching out to people to come and talk to the SEC from small crypto companies, so the SEC can have a better perspective going forward for bringing innovation into the United States. But again, this means nothing to, because they have achieved nothing. The SEC Commissioner Hester Peirce invites small crypto projects to a September 15th meeting in Chicago. The outreach seeks to include diverse voices and regulatory policies affecting early-stage cryptocurrency projects without immediate, essentially, market impact. The U.S. Securities Exchange Commission is conducting an outreach event in Chicago on September 15, 2025. Hester Peirce, a crypto regulatory advocate known for essentially as the crypto mum, will lead the initiative to focus on crypto projects with fewer than 10 employees. The SEC's Crypto Task Force invites blockchain projects less than 2 years old. The outreach aims to essentially improve dialogue and regulatory frameworks. Commissioner Hester Peirce emphasizes the importance of engaging with these small, early block stage, essentially blockchain startup companies. While the event seeks to increase industry transparency, it does not involve financial allocations or grants. The focus is essentially exclusively on regulatory feedback impacting the crypto markets by fostering a collaborative approach to policy essentially deployment and developments. No immediate market shifts or essentially explicit mentions of specific cryptocurrencies like BTC or Ethereum have been identified. The focus remains on projects within layer 1 and layer 2 and DeFi and governance token categories without essentially affecting asset price directly. Previous SEC engagements have encouraged project participation but resulted in limited immediate market reactions. However, they often lead to essentially long-term benefits through better regulatory clarity. Participants may also influence future digital asset policies affecting their operational landscape. We welcome small early-stage crypto projects to meet with us in Chicago on September 15th, said Hester Peirce. Now, moving on from the SEC to China. Before we talk about China, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or statements, put it inside the comment section. More than happy to help you out. Now let's see where we're at. We were at here. Good evening, Miles. How are you doing, brother? I'm doing great. Cali, good to see you as well. How are you doing? Evening. Even the SEC advised the bank if they don't adopt blockchain, they will be left behind in the future. Facts. The SEC, the CFTC, the OCC, the FDIC, they're all pro-crypto now. Hi, Miles. When we see bull run take off, Johnny, good to see you, brother. How you doing? Johnny, we're not that far off. We're really not that far off. Now, China. China wants to catch up with US stablecoin push. China's starting to realize that they're losing in this battle of crypto innovation, and that they essentially, if they don't catch up to the United States, they will definitely fall behind, because the EU is so far ahead right now in terms of crypto regulation. So Middle Eastern countries, so Latin American countries, and so is the United States. According to a report that came out by the retainers today, China is considering greenlighting yuan-pegged stablecoins that could be used globally. China is about to be coming out with their own stablecoin, which means liquidity, which means a lot of liquidity, which possibly could mean that we could see China's stablecoin, essentially on a pair with BTC or XRP or Ethereum or Solana or so on. And that means a lot of liquidity. It's the second biggest economy in the world. So imagine how much money they can bring to the table if they're about to be launching their own stablecoin. The possible reversal, and globally, not just within China, the stablecoin is going to be working globally. The possible reversal has been prompted by the US essentially fully embracing the sector. A roadmap which is on track to be approved later this August will be focused on promoting greater yuan usage around the globe, and stablecoins are expected to be a prominent part of that. China has long been one of the most anti-crypto essentially jurisdictions around the globe. Unsustainable essentially rumors of China banning Bitcoin started circulating yet again on social media earlier this month. After initially cracking down on institutional usage of Bitcoin back in 2013, China then intensified its anti-crypto clampdown in 2017 by banning initial coin offerings, ICOs, and pushing essentially local exchanges offshore. In 2021, the Chinese government banned Bitcoin mining, delivering an enormous blow to the country's thriving industry. China continues to control still 21% of the global hash rate, believe it or not, even though Bitcoin essentially mining is bad, essentially, and they have banned it in their sense, but yet China still controls 21% of the global hash rates, because technically those companies that left America, essentially left China and went to Texas, they're technically still Chinese companies, but they're now using America's energy to mine Bitcoin. You could kind of say that was smart on China's part, because China's not using their own energy to mine Bitcoin. They're actually just using America's energy, because they banned Bitcoin mining, which meant Chinese mining corporations moved over to Texas or other American states and started mining Bitcoin over there. So they're using American energy to mine Bitcoin, and they control 21% of the hash rates. That said, it should be noted that China has piloted its own central bank digital currency, of course, as well. While Hong Kong recently crafted a licensing regime for stablecoins, the potential approval of yuan-backed stablecoins could be a major sign that the second biggest economy is now warming up to crypto. Earlier this year, essentially, the US Congress moved to pass the Genius Act, which they already did, which was then signed into law. The ambitious legislative essential proposal, which was hailed as a massive win for the crypto lobby, establishes a comprehensive regulatory framework for the stablecoin industry, which is why China has decided to step up. Scott Benson previously estimated that dollar-pegged stablecoins could potentially result up to $2 trillion worth of demand for US treasuries. Benson, a strong proponent of crypto, views stablecoins as a generational opportunity to expand the dominance of the US dollar, which is why China is thinking about not only introducing their CBDC globally, but they're thinking about also releasing a Chinese yuan stablecoin, which is going to open doors for Chinese investors globally. They said. They never said they're going to be doing it essentially in small, essentially within China. Domestically, they're going international. Now, crypto market structure bill is what we're going to talk about next. Actually, JP Morgan is what we talk about next. But before we talk about JP Morgan, let's go inside the comment section first. Let's see where we're at. We were at here. And as I said, we're live as always. If you do have a question or comment, put it down in the comment section. So let's see what's going on inside the comment section. Let me go straight into the next news, which is regarding JP Morgan. Miles, why is China cashing in on the US bonds and treasuries? The reason why China is essentially cashing in on US bonds and treasuries is to put pressure on the whole tariff situation. Japan is coming up with their own stablecoin too, which is amazing news, to be fairly honest. Thank you for the update, Orphan. I heard one influencer on TikTok keeps mentioning that the markets will crash by November 22nd. Everybody's entitled to an opinion. When we do have rate cuts, it's going to put a lot of pressure on stablecoins, because they're the ones that are holding the majority of treasury, especially USDT is going to get pressured quite a lot. The moment we get rate cuts, USDT is going to feel the pressure because of essentially the bonds they're holding. This influencer believes that Trump will collapse all the stock markets so people can buy more US bonds. The idea that Trump will collapse the US stock market so people could buy bonds, making riskier assets look even more risky so they can essentially go towards US bonds, is completely ludicrous, to be fairly honest. It wouldn't be a smart move on Trump's end to do that in any sort of a way at all. Miles, I saw some info that 51% of the mining is controlled by just 2 companies. Are you aware of this, and what are your thoughts on that? Yes, I am aware of this, and my thoughts are it's laughable. So yesterday is when I shared this news that 51% of Bitcoin's essentially network is controlled by 2 mining pools. And that if this mining pool becomes compromised, I explain all the things that could possibly happen. People could essentially spend their Bitcoins and then get it back, which means they're spending it twice. And there's so many other things that could possibly go wrong, which puts into question, which the Bitcoin maxis are obviously afraid to answer, that this, claim that they have over Bitcoin as being the only decentralized crypto project on planet Earth. Is it really though? Look, nothing in this world is fully going to be decentralized. As I've said millions of times, there's always going to be elements of centralization here and there. Bitcoin mining corporations, there's 5 big ones, and they're all public. Who's the majority shareholders? BlackRock and Franklin Templeton, and one of the mega corporation. China controls 21% essentially of the hash rates. 2 mining pools are controlling pretty much Bitcoin in general. So the idea is, and the owner of Bitcoin, whoever it may be or which government agency may be, holds a tremendous amount of Bitcoin. So this idea that Bitcoin is, decentralized and nobody can control its outcome. Well, 5 corporations, all public, majority shareholders are BlackRock and Franklin Templeton. 21% of the hash rate is controlled by China still. 2 mining pools are controlling the entire network pretty much. None of that sounds decentralized to anyone, because there's always going to be elements of centralization. Cryptocurrencies are not about freedom, it's about control. Now, but the reason why I found it laughable is because you know it for yourself. Let's just be honest with ourselves. CMF members, it's always laughable when we're right. We'll be saying for the longest time that essentially, nothing is really decentralized. There's always elements of centralization here and there. Hi, Miles and CMF. Golden Dragon, good to see you. How you're doing? Please like my friend. Please like my friends. Miles is the man. Let's go, Golden Dragon. Thank you so much for that. D, thanks. No problem, D. Anytime. Now, and also, honestly, thank you so much to everybody who has liked and retweeted this live. Thank you so much. JP Morgan is what we're going to talk about next. And it seems like JP Morgan has decided to enter into AI with a pretty big investment. $22 billion. Is JP Morgan, realizing that maybe they're better off becoming a fintech company? Because that's a pretty hefty investment. So JP Morgan and Mitsubishi are negotiating a $22 billion loan to finance an AI data center. JP Morgan Chase and Mitsubishi UFG Financial Group are reportedly getting ready to close a financing deal worth $22 billion to support Vantage Data Centers deployments of around 1,200 acres campus in Texas known as the Frontier Facility. Vantage Data Centers announced essentially that JP Morgan and Mitsubishi UFG Financial Group are leading the debt financing of its upcoming $25 billion essentially Texas data center campus. With the backing of local politicians like Republican State Governor Greg, the campus is being touted as part of Texas's heavy instrument in AI technologies. Everything is bigger in Texas and includes innovation and technology, said the Republican. The financing is proof that Wall Street has gone all in on AI arms race, as it reflects the speed at which funds are being raised to build essentially properties that big tech companies rely on to power their essentially artificial intelligence models. According to sources familiar with the proceedings, private capital groups Silver Lake and Digital Bridge plan to commit essentially an extra $3 billion in combined equity financing to support the building of data center campuses and expected to be among the world's largest upcoming completions. I just want to mention one funny note, honestly, a very funny note, that America is investing, essentially JP Morgan, American bank, is investing $22 billion with Mitsubishi UFG to create data centers to bring that innovation of AI and more data storage to the United States. Do you know what's happening in the UK on the other hand? It came on the UK news just a few days ago that they're telling people to delete their old Gmail emails to free up server space on data storage in the UK. So you have over here America investing $22 billion into an AI center, and in the UK they're telling people to delete their old Gmail essentially emails because it's taking up storage in data centers. On one side of the pond, billion-dollar investments to create more data storage. On the other side of the pond, they're telling people to delete their old Gmails. According to sources familiar with the proceedings, private capital groups Silver Lake and Digital Bridge plan to commit an extra $3 billion in combined equity financing to support the building of data centers. And essentially, it is expected to be among the world's largest, essentially, completion on that sense. The campus will house 10 data centers, the first of which is expected to be finished in mid-2026, while the rest will have been built by the end of 2028. Vantage came into existence in 2010, thanks to an initial essentially investment from Silver Lake, after which it started operations of a data center it required essentially from Intel. A Silver Lake executive played a pivotal role in the proceedings and essentially was appointed chief executive of Vantage in 2013. Under essentially Vantage, it grew rapidly into a global data center, initially focused on building data centers to support the cloud computing operations of essentially large tech groups. However, more recently, it has been building properties with more essentially advanced specifications targeting the booming AI market space. Vantage was sold in 2017 to Digital Bridge, a private capital group focused on essentially digital infrastructure and technologies for around $1 billion. However, in 2024, Silver Lake essentially reinvested in Vantage by co-leading a $9.2 billion financing alongside Digital Bridge. The financing deal between JP Morgan and Mitsubishi UFG Financial Group are planning to underwrite is being discussed as America's biggest technology companies turn to large investment funds to provide the funds they need to rapidly develop new data centers to avoid breaking the bank. Examples of tech companies doing this include xAI, Meta, Blue Owl. Elon Musk's essentially xAI has reportedly raised $10 billion of debt and equity since July to support the construction of its data centers in Tennessee, and has reportedly met with private essential credit lenders to raise even more billions of dollars. Meta, the parent company of Facebook and Instagram, has also teamed up with investors to raise $29 billion of debt and equity for its own AI projects. It is reportedly nearing a deal with private investment firm Blue Owl and bond giant essentially, although it has also essentially had talks with Apollo, essentially Global Management, and KKR. Blue Owl has already helped finance $15 billion in projects and for Coral, OpenAI in Texas, and the state continues to attract data centers due to its relatively low electricity costs on that sense. And all this interest in data centers has analysts convinced that demand for them will continue to climb alongside AI markets, which relies heavily on such infrastructure. So JP Morgan is about to be essentially doing the biggest debt raise essentially for in AI data infrastructure. I think personally it's a great move for JP Morgan to be more involved in AI than being involved in finance, because they're losing the race of finance to Ripple, in my opinion. Might not look like it now, but later on, JP Morgan is definitely going to be losing that race to Ripple, in my opinion. Ripple is definitely going to become much more bigger in the financial sector than JP Morgan could have ever dreamed of becoming one day. Even though they are quite big now, they won't be as big as we go along. But JP Morgan becoming a data center for AI infrastructure makes a lot of sense. Not that they are going to do that, they're just financing it. But if they did, it will work out well for them. Now, crypto essentially groups are warning bank proposals is what we're going to talk about next. Before we talk about crypto and banks, let's go inside the comment section. Let's see what's happening there. As I previously, this is live, which means if you do have any questions or comments, put it down in the comment section. We're happy to help you out. So, hi, no, we were here. Where are we? We are. Yes, Miles, you said that this year going to happen too many major things in the crypto. Yes, I did. Facts, Kelly. Let's go. The KGB also wasn't as big as they essentially let people to believe yet. I'm paying for storage on my Gmail. If they don't pay, they say you'll not receive any emails. That's not good. That's not good at all. I think definitely delete the old emails. Definitely delete the old emails so you don't have to pay for storage on Gmail, is what I would say. Definitely delete them. Now, I shared with everyone a few nights ago that essentially 42 banks are against Ripple and Circle and even Paxos getting a banking license, and further on with Ripple getting a Fed account. But they're doing it through banking associations. Well, we have an update on the matter of, essentially the OCC being pressured by banking associations and the 42 banks behind them to slow down the progress of Ripple getting a license and essentially Circle. Because on the other side of the spectrum, the crypto association groups have decided to stand up in defense, you could pretty much say, of Ripple, Circle, and even Paxos. The Crypto Council for Innovation, CCI, and the Blockchain Association urged lawmakers to oppose proposals backed by the American Bankers Association and state banking groups. In a letter to the Senate Banking Committee, the crypto organizations argued that the bankers' proposal prioritizing essentially shielding banks from competition over protecting consumers, potentially essentially stifling innovation inside the crypto industry. And it is, because Ripple will definitely become a competition to, as I said, JP Morgan. Crypto advocates say the banking lobby recommendations will only undo essentially compromise reached after extensive negotiations. They argued that if Congress approves their request, it would suit the market towards banks and essentially suppress innovation. You could honestly tell who was behind Gary Gensler slowing down the progress of companies like Ripple. It was the banks in the United States. It was banks like JP Morgan, or essentially BlackRock, who are holding on and don't want to let go of their power. But at the end of the day, they lost. The Ripple case ended. XRP in itself is not a security. Ripple's applying for a banking license. At the end of the day, Ripple went international, so it worked out in Ripple's favor. They further essentially commented payment stablecoins are not bank deposits, money market funds, or investment products, and thus they are not regulated similarly. Unlike bank deposits, payment stablecoins are not used to fund loans. In their letter, the groups also drew attention to Section 16D, a clause that the banking groups want to eliminate. It lets state-chartered bank subsidiaries operate stablecoin businesses across state borders without further licensing requirements. They stated that scrapping would only reintroduce the fragmented regulatory environment that undermines the interstate commerce. They're basically saying that the banking associations, with the 42 banks behind them, were trying to essentially stifle and remove certain laws that could benefit them and not be in favor essentially of companies like Ripple trying to get a license. And if they did get a license, they would need more licensing to move forward if they remove that clause. They also contended that suggestions that stablecoin yields might pull deposits away from community banks, noting that a July 2025 analysis by Charles River Associates found no substantial link between the two. Banks are saying basically that if we do give Ripple and Circle a license and Ripple a Fed account, then our customers, the bank's customers, are going to move away to wallets, crypto wallets, and no longer have bank accounts slowly. And that's what they're afraid of. As previously reported by Cryptopolitan, several banking institutions, including the Banking Policy Institute, BPI, have petitioned Congress to amend the Genius Act, warning that essentially any existing loophole risks constraining credit for U.S. consumers and businesses. The banking group have essentially explained that although the Genius Act blockers issuers from offering yields, it fails to impose the same restriction on exchanges or affiliates. Thus, they believe some issuers can exploit this loophole and channel yields through exchanges. They even cautioned that the rule gap may result in deposits and outflows of up to $6.6 trillion for conventional banking systems. The bank also cited their worries that the yield-bearing stablecoins could essentially displace deposits, threatening the core mechanism by which banks fund essentially loans through interest-driven essentially savings accounts. They also explain that stablecoins are fundamentally different from bank deposits, since they do not fund lending activities or invest in securities in essentially bonds and yields. Therefore, a synthetic shift towards them could create vulnerabilities in the US credit system. Market data illustrates the scale of yield-bearing stablecoins. Analysts like Will Vinson, a former Standard Chartered executive and now the founder and CEO of Uniform Labs, believes the Genius Act essentially restrictions on yield-bearing stablecoins will expedite the flow of capital into tokenized real estate, essentially the tokenized real-world assets. To date, yield-bearing stablecoins have paid out more than $800 million in returns to holders, according to StableWatch report. Additionally, over the past 30 days, Ethan's essentially SUSDE dominated payouts of over $30.71 million, with securities built essentially on the ecosystem. Meanwhile, major financial institution groups are essentially urging global banking regulators to abandon their proposed new rules for cryptocurrencies, and in a letter warned that the measures could end up blocking banks from the $2.8 trillion in digital assets. 8 influential trade associations, including the Global Financial Markets Association and the Institute essentially of International Finance, wrote to the Basel Committee on Banking Supervision to request a temporary pause on the rollout of the standards related to crypto that were supposed to take effect in January 2026. It's not just that essentially the banks and the associations, the pushing associations to go after the OCC to stop the progress or pause it for a little bit. They're actually even going after the Banking Basel Committee as well to slow the progress of Ripple and Circle. The coalition warned that the print of capital treatments in the rules would make crypto operations uneconomical for banks, which could force the sector into fringes of regulated financial systems, which is somewhat ludicrous. Honestly, every time I see banking associations telling the OCC to slow down or telling the Banking Basel Committee to slow down on giving licenses to companies like Ripple, honestly, it restores my faith. Not that I've lost any, but it gives me more faith on what Ripple's about to achieve. The more I see banks panic day by day, the more I see banks essentially weaponize the banking associations to go towards the banking committee, to go towards the OCC, it makes me more happy that I've definitely put money on the right bet. That Ripple is definitely here to blow them out of the waters. This is how scared and panicky they get every time Ripple takes a step towards the banking sector. On that note, there's also a high-ranking official rumored to be the next Fed chair, which is what we're going to talk about next, and he is extremely pro-crypto. Imagine a Fed chairman extremely pro-crypto. Before we talk about that, let's go inside the comment section first, and then we'll go straight into the next news. So let's see where we're at. I'm paying for... Miles, when is the deadline for Ripple getting their banking license? No deadline on it whatsoever. It could be essentially, we should get, as I said, this year we should get some sort of update on that matter. Do your thoughts on MicroStrategy being a Ponzi? Do I think MicroStrategy is a Ponzi? A long time ago, I said to everyone that there's going to be a time where MicroStrategy has to pay back the borrowed money. And if they can't do that, then it could end very bad for them. Again, this is not financial advice whatsoever on MicroStrategy at all. But in the past, I have said that if MicroStrategy doesn't pay back the money they borrowed, then it can end very bad for them. I also said if the United States of America doesn't buy Bitcoin and hold 5% of their supply, it's bad for MicroStrategy, because then MicroStrategy needs institutions to buy in so they can jump out. The majority of Bitcoin treasury companies out there only decided to jump on the bandwagon of Bitcoin because they knew that could be a way to boost their stock price. MicroStrategy was pretty much a failing company. Michael Saylor himself has been caught up in a Ponzi scheme once. So here's a little background. Michael Saylor was caught in a Ponzi scheme a long time ago. Billions of dollars of a Ponzi scheme a long time ago. Then MicroStrategy is pretty much a failing company. One day, MicroStrategy decides to get involved in Bitcoin. Why? Because I'm guessing Michael Saylor thought to himself, our company stocks are pretty much on the failing end. what can we do to boost the price? How about we become a Bitcoin company? We start essentially producing more shares and use that money to buy Bitcoin. Bitcoin goes up, we go up. I mean, what's there to lose? We're already failing as a company. So they decide to start buying Bitcoin more and more and more and more. And then somehow they caught a breakthrough in between where some essentially governments started to talk about Bitcoin. El Salvador essentially got more involved in Bitcoin. Latin America just got more involved in Bitcoin. Trump becomes president. It all starts to work in their favor. They went from a failing company and a Ponzi scheme, essentially CEO, to now a company that has a very high profile stock, number one, essentially, open market, essentially public company with the biggest Bitcoin holdings. That's not an ETF. And then essentially other companies started to take note. Metaplanet, a Japanese company who also had a failing stock. Pretty much Metaplanet, you could even say, was on the verge of going bankrupt. And Metaplanet saw the vision that MicroStrategy laid out, that Michael Saylor laid out, where MicroStrategy was a failing company, one day buys Bitcoin and their stocks go through the roof. So Metaplanet thought, well, our company is also failing on the stock market. What can we do to boost our price? I know we follow his plans because it worked out for them. It will work out for us. And it did work out for Metaplanet. They went shooting up and they ended up now buying a bank. They were some sort of a hotel, essentially receptionist company that now owns a bank, or was about to buy out a bank. And again, they were a failing company as well. There's also been an article regarding the amount of companies that have come forward, public companies who have failing stocks. Like literally, there's on the stock market, nobody pays attention to them because they're just useless stocks, who one day decided to join on the Bitcoin bandwagon to boost their prices. Now, the funny part about this is that the Bitcoin maxis will scream from the top of their lungs that Bitcoin is decentralized and we don't need the institutions or the governments. But then on the other hand of the spectrum, Bitcoin maxis love it when Michael Saylor buys more Bitcoin. They love it when more companies jump on the bandwagon of Bitcoin just to boost their stock prices. They love it when Metaplanet buys Bitcoin. They love it when El Salvador essentially buys Bitcoin. They love it when America, mentions they might buy Bitcoin. But on the other hand, the Bitcoin maxis will scream from the top of their lungs, we don't need the governments, we don't need institutions, we are decentralized. But they're really not, because they're begging for institutional money and they're begging for the government to buy in. Same way as essentially Michael Saylor was begging the US government to buy in, didn't really work out. And also regarding, the Meta, that didn't work out. Michael Saylor decided to join Microsoft in their meeting to make them buy Bitcoin. They didn't let him in the meeting, obviously, and it didn't work out either. So it's just, so on the question of is Michael Saylor, MicroStrategy, is it a Ponzi scheme? That's, the background you needed to know. Michael Saylor has been involved in $1 billion Ponzi scheme before. MicroStrategy was a failing company. They brought into Bitcoin, their stocks went higher and higher, they printed more shares and sold to buy more Bitcoin. So did they do it for the right reasons? No. Is it going to fail? Well, I'll tell you what, we still don't know who created Bitcoin, which as an investor, it's crucial, absolutely crucial to know where the investment came from. If I walked into any Wall Street office, and said, I have this token, 21 million supply, I'm not going to tell you who the founder is. And the founder could be an entity, it could be a government. They own quite a bit that could collapse the network. And I want you to buy into it. Everybody will call security on me in Wall Street and kick me out. Because for anybody on Wall Street to buy an asset, they would need to know, which company is it coming from? How is it developed? What's its purpose? And there's so much more to it. But yet again, somehow It seems like a brilliant idea to buy into an asset where nobody knows where it came from, who created it, who could most likely collapse the network. And that now 51% is controlled by 2 mining pools. That just rings more alarm bells. Yet, somehow that sounds like a genius investment. In some other people's eyes, it would seem like a moronic investment. Honestly, if I walked into Wall Street and said that, they would call security on me. They would say, take this lunatic out of my office who's trying to sell me something he can't tell me where it's from or who owns a lot of it. But yet, it seems like a genius investment. Now, could the US governments moving in and confiscate, or could these be dumped on the market since creditors have to be paid? They could be dumped, which will essentially cause another situation for MicroStrategy. It's not his first one. Could the US government confiscate it? Yes, if MicroStrategy ends up being a Ponzi scheme. And also if MicroStrategy is saying, we don't want to show our books, that just makes it 10 times worse. Good pre for regulations. Yep. Hello, Miles and family. I'm sorry to be late. School-related matters today. No problem, Scott. Good to see you, brother. How you doing? Miles, what news about Black Swan and collapse of cryptos? No news of collapse of cryptos whatsoever. Interesting. Let's go deep. Miles, hope you're doing. Miles, how are you doing today? I hope my family members had a good day. Let's go, Scott. I'm doing great. Miles, you're a walking gold mine in this field. Thank you so much, D, for the kind words. Share the live. Let's go, Scott. So true. If I do business, I want to know who, of course, with who I'm working. Facts. Now, the person that could possibly be chosen as the Fed chairman is pro-crypto. So, high-ranking official rumored to be the next Fed chair makes a statement on cryptocurrencies. The Fed member Chris Waller said there is nothing to fear from cryptocurrency technology. In a speech today in Jackson Hole, Waller referred to smart contracts, tokenization, and distributed ledger technologies, saying there is nothing to fear when thinking about these things. Using innovative technologies to build new payment services is nothing new. Speaking at the SALT conference, Waller noted that some technologies have been unfairly demonized in recent years because of their association with digital assets. They're just technology. Why are they so essentially, staggered? They offer more useful and interesting avenues. We should look at them and embrace them, he said. Brilliant, man, to be fairly honest. Waller, who was appointed to the Fed by Donald Trump in 2020 and essentially is seen as the strong candidate for the future Fed presidency, has long been known for his supportive stance towards stablecoins and the crypto industry. Stating the Fed is exploring possible use of tokenization, smart contracts, and distributed ledgers. Waller said, as a central bank, we may never follow this path, but there is no reason why we shouldn't explore it to see what happens. Chris Waller could be chosen to replace Jerome Powell. So far, he has shown that he is standing with the crypto sector, which is incredible. This is why I'm saying I'm loving the idea of Trump's administration, Republicans, and pro-crypto people are just controlling every aspect of the United States of America. This is what we love to see. The biggest market space in the world controlled by crypto thoughts and crypto footsteps. Now, moving on to Ripple news. So today we had Ripple news regarding safety. It wasn't just Ripple. A few other companies were involved in that matter. But safety is a very big thing inside the crypto space, especially with the amount of scams that are going on inside the crypto space. I mean, just a few days ago, a UK crypto exchange was compromised for over £12 million. In a tweet, Ripple announced today it has become the founding member of a newly launched beacon network at its first of its kind real-time crypto crime response network and an industry-wide project led by TRM Labs. Developed in partnership with law enforcement, exchanges, and stablecoin issuers, Beacon Network aims to preventing illicit funds from leaving the blockchain. Ripple is proud to be a founding member of the essential TRM Labs Beacon network, and its first of its kind real-time crypto crime response network. Working with industry and law enforcement, Beacon helps stop illicit funds even before they exit the blockchain, which is incredibly impressive. As essentially crypto crime evolves, fragmented responses allow bad actors to essentially exploit gaps, and recent attacks have demonstrated how rapidly stolen funds may move. The Beacon network allows verified investigators to flag addresses associated with financial crimes, promptly alerting exchanges and initiating risk-based responses. So let's say if there's essentially a wallet that's typically used for crime transactions, illicit activities, that wallet will be flagged and won't be able to accept any sort of tokens from essentially crypto exchanges. The move steps up Ripple's effort in preventing crypto crime and positions the firm at the forefront of industry-wide security initiatives. Since the inception, essentially, Ripple has moved against crypto scams, monitoring and ensuring the removal of fake ads and posts that promise fake XRP giveaways. And there are so many fake XRP giveaway ads everywhere. Please be aware, people. There's never any such thing as free money in this world. The idea of free money doesn't exist. It's never existed. There's always a catch for free money. So if you ever see anything on giveaways inside the crypto space, stay away from it. Don't even touch it with a 10-foot pole. In response to these XRP giveaway scams, as well as impersonations of its top officials, Ripple stated it's recruited an external cybersecurity and digital threat intelligence vendor to essentially assist in reporting and removing fraudulent XRP giveaways and other fake crypto promotions. Ripple has also undertaken efforts to educate consumers about scam threats and how to avoid them. Brilliant. I think it's an amazing idea that Ripple has become a founding, essentially, member of this team of protecting the crypto space, one from essentially XRP scams and two in general for the crypto space, to be fairly honest. On that note of Ripple protecting its essentially, retail section and institutional section from scams, we have come to the endings of tonight's live. This was episode 358 of the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles, and you can tune into this live Monday to Friday, 10 p.m. London time onwards for the most recent news on cryptocurrency, CBDCs, AI, politics, and regulations. On tonight's live, we talked about Ripple stepping up the game and protecting its users from crimes and scams. We talked about high-ranking official member that could be chosen as the Fed chair who is extremely pro-crypto, replacing Jerome Powell. We also went through news regarding essentially the Banking Association feeling the pressure one more time, and the crypto section standing up and protecting companies like Ripple, you could pretty much say. We talked about JP Morgan and Mitsubishi getting involved in essentially AI data centers, with the biggest deal to be ever done, $22 billion. We talked about the crypto market structure bills. We also went through news on tonight's live regarding China pushing their global CBDC and their digital essentially version of a stablecoin. If China does step into the stablecoin sector and goes essentially global with the idea, the second biggest market space on the planet, going towards stablecoins will bring tremendous liquidity towards the crypto space. We also talked about tonight's live regarding the SEC essentially hosting their event in Chicago, now asking the crypto companies to come forward and have a chat with them. We also went through news regarding the Federal Reserve expected to hold the interest rates, a perspective coming from Morgan Stanley essentially and Bank of America, very twisted perspective in my opinion. We also went through news regarding crypto advocacy groups standing behind Quants, who to be the CFTC chair. We also went through news on tonight's live regarding the matters of the Senate pushing and that 18 Democrats might be in favor of Republicans voting for pro-crypto, essentially. In other words, the Clarity Act and the Anti-CBDC Act. We also went through news on tonight's live regarding Donald Trump might not being able to replace Jerome Powell, the Fed chairman, but he is replacing one by one everybody around him. And we talked about tonight's live regarding what was discussed in the minutes. Those are all the news topics we discussed on tonight's live. This was episode 358 of the CMF Live. Episode 359 will be tomorrow at 10 p.m. London time, as usual, Monday to Friday. Before we do go, obviously, let's go to the comment section first, and then we'll call it a night. And thank you so much, honestly, to everybody who has liked and retweeted this live on X, if you're watching this on X. And thank you so much to everybody on YouTube who's also been watching this live, who's liked the live as well. If you haven't liked or retweeted, please like and retweet, CMF members. And if you essentially subscribed to me during this live and essentially followed me on X during this live, welcome to the CMF. Let's see where we're at the conversation before we do go on. Let me see where we were at. We were at here. Love Ripple Protection. Let's go, Susie. Richard, good to see you as well. How you doing? Good night, Miles, and all the CMF. Thank you for a great live and great news. Let's go, JP. See you tomorrow, same time as usual. Thanks, Miles. Have a great night, and see you tomorrow, same time. Artistic, see you tomorrow, same time as usual as well. Night, Miles and CMF. Pablo, see you tomorrow, same time as usual. Thank you for sharing your updates, Miles. Have a lovely night. All Lena, let's go. See you tomorrow, same time as usual as well. Thanks again. Have a good night. D, let's go. See you tomorrow, same time as usual. Good night, Miles. See you tomorrow night. Funky Brother, see you tomorrow, same time as usual as well. Good night, Miles and CMF. Thanks for great news. See you tomorrow. Free and forever. See you tomorrow, same time as usual as well. Good night, CMF. Good night, XRP Army. Funky Brother, see you tomorrow, same time as usual. Thanks, Miles, and good night, CMF. See you tomorrow. See you tomorrow, same time as usual as well. Good night, Miles and CMF. Mike, see you tomorrow, same time as usual as well. Thanks, Miles. You're a legend. Good night. Comatose, let's go. See you tomorrow, same time as usual. Thanks for your time, Miles. Much appreciated. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Night, Miles. Let's go, Callie. See you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world, CMF members. Love you all. See you all tomorrow for episode 359 of the CMF Live. Like, comment, share, retweet if you already haven't, and follow and subscribe if you also haven't as well. If you have, thank you so much. Thanks, Miles, and good night all. Stormy, see you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow, brother. Same time as usual as well. See everybody tomorrow, same time as usual. 10 p.m. London time onwards. Love you all. See you tomorrow.